Thanks for joining. Looking forward to this session. So before we get into the session, by way of introduction, I'm Lachlan McKnight, the CEO of LegalVision, which is a tech-enabled legal services business, assists lots of startups, lots of small, medium businesses and enterprise clients. And I've got Stuart Cook here. Stuart, do you want to introduce yourself before we get started?
Yeah, sure. My name's Stuart Cook. I was originally the CEO of Zambrero, Mexican restaurant chain, and now I've got my own corporate advisory business called TWIYO Capital.
Great. So look, the sort of concept of this chat is really about moving your business back to kind of I guess an even keel in a very different environment to the environment that obviously all businesses have been operating in up until kind of March or so of this year. So what we really wanted to do was go into some of the sort of basic things, largely around Stuart's experience with Zambrero and working with a range of businesses now, as to kind of what are the things to think about in this kind of new era of normal. Now, we've got a few things we wanted to go through, talking about how to kind of manage your employees in the new environment. But I think the thing I'd like to get into first, Stuart, is more about the opportunity for businesses, right now, as opposed to kind of thinking about all the issues that businesses are facing. What are the opportunities that you're seeing for businesses in this kind of new era, this new normal?
Yeah, so thanks for that. And so, yeah, with my experience with Zambrero, but also TWIYO Capital, but also one of the board roles that I have is with the Entourage, which provides entrepreneurship education. And we recently put out a survey to a few thousand of our business owners, and it was actually surprising to see the data coming back with over 50% of people saying that they're seeing this actually as a positive with a huge growth opportunity. I know that when COVID hit, we all of the businesses that we're involved in instantly had to take stock of what is their cost base, what is their variable cost, how can we start to make more margin. And I think over the past few years of we've been in a very good economic conditions, and I think a lot of businesses became a little bit complacent with understanding their cost centers and where they were spending money, and probably living a little bit in excess. And so a number of businesses I've seen have dramatically reduced their cost base, have been able to pivot into additional revenue streams. And so it means that they're able to not only come from a stronger base that is leaner, more profitable, but now they've added additional revenue arms to their business that they didn't have before. I think that, in some of the service industries that were typically face-to-face, consumers have been forced to deal with everything virtually. I'm sure it'll be the case with LegalVision. You probably see a lot of that now, whereas it used to be that you'd have to trudge into the city, spend $58 on parking to go visit your lawyers, and then wait in their foyer for 15 to 20 minutes while they finish with a past client. Now, there's no qualms with just having a Zoom conversation. It's more efficient. You get to spend more time talking about the real things and not wasting time. So I think there's a lot around as well as workplace productivity.
Yeah, no, exactly. I mean, obviously, in terms of legal services, we started LegalVision, it would have been about 7 years ago now, and the entire business model was based around acquiring customers online and servicing customers as much as possible online. So we were lucky in the sense that the whole kind of COVID-19 shutdown didn't really affect the way that we interact with our customers. But what I think I have seen, and again, it'd be interesting to get your views on this, is a lot of businesses that up until now maybe didn't have kind of a digital first strategy, and we're kind of still, I guess, living off the kind of the customer base that they built up over the years pre-COVID, have now kind of pivoted to that kind of digital first approach. And actually, what we're seeing is increases in digital marketing costs, but at the same time, a lot of businesses are finding new ways of attracting customers. And that's really, I think, the exciting thing, particularly a new business, is you don't have all the legacy costs that you might have had, if you're an ongoing business. And so it's a great time actually to be potentially starting a business. Are you seeing a lot of new businesses kind of being launched in your advisory capacity?
Yeah, so we've completed 4 raises this year since COVID. So there is actually money out there and money pouring into these new areas. Because I mean, we've got one client who's now doing $250,000 a week in revenue, and before April didn't even exist, and that's in the online grocery space. They don't have the huge footprint, the bricks and mortar. Again, consumers are now happy to be able to get their fresh fruit and vegetable delivered to their house because it was almost forced during COVID times. And I think everybody actually upped their service delivery, they upped their customer service, so they actually created a better experience for everyone. And so people come in with less capital, they can come in with an idea, they can test it by just doing really more small marketing exercises, see their cost of acquisition, and then go for it really, really quickly. And so we're seeing a number of new businesses that are raising capital, doing it quickly because they've been able to test and just go for it post-COVID or during COVID.
And so, obviously, interesting time to be launching a new business. Let's flip back to, you've got an existing business. You mentioned before, and again, I think a lot of businesses have gone through this, but it might be worth kind of reiterating the basics here. You mentioned before that a lot of businesses that you've been working with have had to, cut costs quite significantly, really reduce their cost base in order to, position themselves for, firstly, the kind of COVID recession, but then secondly, of course, hopefully the upturn in business post this period. What are the kind of 3 or 4 basic things that you sort of recommend a business really does from a cost based perspective in order to survive and then obviously prosper in this new environment?
I mean, just the basic of renegotiating contracts. The amount of businesses that we see that have had the same supplier and the same agreement for the past 5 years, but have grown 3 or 4 times, but not getting renegotiated any better rates, not renegotiated any better terms or conditions, or even payment terms. I mean, we all start off as smaller businesses, and you're required to cash on delivery or payment of 7 days. And so even just working with your existing cash flow and capital by expanding that out to 30-day payment terms, renegotiating rent. I'd hate to be a landlord in the commercial world at the moment. It's probably a very scary place for them to be in. And so there's amazing deals to be done, renegotiating rents or extending leases as well with more favorable terms, so you can lock in those savings for a longer period of time. So there's lots of different things, but just even as basic as going down your P&L and looking at where do you spend the most amount of money, and dig deep there, start there, because if you can get a 10% or a 20% reduction, it goes straight to your bottom line. So it's pretty basic stuff.
For sure. Yeah, no. And I mean, I guess for a lot of businesses that haven't had to think too much about this, it's actually an opportunity more so than anything else. Yes, obviously there've been tough times, in particular if you're in the sort of hospitality industry and so on and so forth. But for businesses that, are in other industries that haven't been affected as much, actually, the way of looking at this is an opportunity to position yourself, for growth in the next period. And that's something that I think is missed a bit in all the doom and gloom. If you look at the news every day, we're really kind of seeing everyone talking about the negatives of the situation, but actually there is opportunity in there as well. And I think, it is worth remembering that, particularly as a founder or a business owner, because, ultimately it is what it is from that perspective.
Yeah. And I think that they're exactly right with the amount of opportunities that are out there, because there will be a number of companies go under because people have failed to act, so they've refused to change what they've always done in those times. And that's always the case in any new generation, is that the new comes through and want to change and be slightly more agile. And so look for those other businesses that exist around you. If you're in restaurants and hospitality, like one of the worst hit sectors, is that there is going to be a lot of empty locations come end of JobKeeper. But is this the chance for you to be able to go and get an existing restaurant that's completely fit out, that you'd be able to almost put lipstick on a pig, and change it and create your second or third location and then sell that to somebody who's in love with your brand and start your first franchise. So there's definitely opportunity in every space. I mean, I've got investments in gyms, hospitality, events, and tourism, and they were all like, it was like a punch every second day at the beginning of COVID. And nearly all of them are now rebounding because we've been flexible and we've understood our cash position. We've negotiated hard with our current suppliers, and then, and taken advantage of some good opportunities out there.
Yeah. So let's talk a bit more specifically about your time at Zambrero. Did you go through, whilst running that business, did you go through an economic cycle where there was a kind of a downturn, and are there any lessons from that you could kind of share with everyone listening in terms of the current environment?
In a way we did, in a way we sort of didn't, is that, I joined the team when we had 2 restaurants and in 2009. And so that, we were going through that dip in the economic cycle, but, we weren't already a well-established franchise, but we were lean and mean. There was an amazing finance available for franchisees. And we're already seeing that's already the case now. And you throw the banking commission on that last year, it means it's going to be very, very difficult to be able to get finance. But it's a slightly different, but I landed when we were opening up Zambrero in Thailand as well as Mexico. I landed, and then the military coup happened the next day. And so we still went ahead. And very, very challenging situation to go and do that. But I think that when times are really, really good, that's when you actually have to be the most careful, because everybody's throwing money at haphazardly around. But when times are tough, that's where the most amount of opportunities are, because everybody's freaking out and really, really scared. So, one of the things that I was always taught is turn down the noise. Sometimes don't listen to the news and what everything is saying and all the doomsday, because that's all that click bites. But know your numbers, look at what other people are doing, really be observant, and look out there in the market, what are those opportunities that are available? I mean, is there the ability to partner with another company and become a bigger, stronger company together, that you might have really complementary databases of customers that you can cross-sell to each other? There's many different deals to be done out there.
Yeah. Just want to mention, if you have questions for Stuart or myself, make sure you chat them into the chat function, and we'll obviously answer them, either over the course of the rest of this little session or at the end. So feel free to kind of chat them in. So look, what I think would be interesting, you've obviously got experience in a bunch of different sectors, but if you were kind of looking, you're thinking, and I think there'll be a lot of people listening in that are actually, thinking about starting a business, not necessarily, haven't started yet. What are the sectors that you think are the sectors that are going to kind of go well over the next 5 to 10 years? And presumably, if you were starting thinking about starting a business, therefore those sectors that would be sensible to consider as options.
So I think that. So I think anything related to health is really important. So I think that's was already becoming a bit of a mega trend prior to COVID, but that's going to speed that up. So everything from your nutrition to health and wellness, once we're allowed to actually get back into gyms, not always the case at the moment. But I think that entire thing is it's definitely brought people's attention back to their health, and also not only their health physically and from nutrition, but also mentally. The amount of people who are going to focus on, who need that sense of community, because I think that the change of, a Dropbox came out yesterday, I think it was, or the day before, and Dropbox now are getting rid of every office globally. They are forcing people to work from home. They're not going to take you get a choice. They're going to level the playing field, because they thought it might have favoritism if some people are in the office, some people aren't. And so they've basically changed their workforce of tens of thousands of people. Hey, you're all working at home. And I think a number of companies are going to do that. And it's sort of work from home or work from anywhere type thing. Yeah. So whether or not this might be a bit of reinvigoration for WeWork, which was not doing incredibly well, but is there different services that you can add? Is there amazing things to be able to provide benefits for employees? I know one business that started up during COVID, and because they are now providing at-home perks for all the staff of big corporations. And so because now that the companies don't need to have such a huge overhead of rent and electricity and all the internet and the services and the IT and everything they're now able to provide the different offerings for people who are working from home to make their experience at home even better. Gin companies have been able to pivot to at-home gym tasting sessions, which I've done a couple of those. So I think the experience side of things, because I'm not sure how international travel will bounce back over the next few years, but definitely domestic travel and unique experiences. I think those people who are employed have probably found out that they've actually saved a lot of money during this time, and they're working for those really amazing experiences. From a retail front, if you can come up with the next what's that putt game, that golf that's going really well everywhere, but if you can go into a shopping mall and work out how to convert all of those failing clothing retail brands and drive extra traffic to a Westfield shopping center, that's $1 billion idea there. I haven't got one, but I think if you drive people to shopping centers with a experiential or entertainment type thing, that's definitely an interesting sector. So and anything e-commerce.
So there's really lots of options out there. There's lots of opportunity. I think that's the key message that you're kind of giving us here. I mean, I think one thing, on the whole work from home sort of kind of concept, there's a couple of questions. One is, a year or so in, will the kind of trend continue? I think what a lot of business owners and managers are worried about is, yes, teams have worked effectively remotely over the pandemic period, but as you continue to hire and people leave, you end up with a group of people who've potentially never met each other face to face working together, and how will that how will that affect productivity in the kind of more medium to long term? So I think that is something that we'll kind of see, and the other consideration that I think is important is, obviously in Australia we have, for better or worse, a huge raft of workplace health and safety rules, regulations, and legislation. And obviously as a business manager, owner, you have to comply with those obligations. And how do you do that if people are working from home? So I think that's going to be a big trend, certainly legally. Is probably employees, potentially suing employers. They've been injured, sat at home. Were they working? Were they not working? All of those kind of questions, I think, are going to come into play. And so making sure that your employee situation is safe. You have a structure around what you're doing there, I think, is going to be super important, because I do tend to think a lot of business people, owners, founders will think, with people working from home, that's a whole big cost saving there. And I think what you have to do is, take some of that cost saving and potentially reinvest some of it into the employee experience, the work from home experience, to make sure that the business continues to grow and to function well in the new environment. So there's a lot to think about, I think, for a lot of business owners. Just to remind everyone, if you've got questions, make sure you type them in, and we'll try and answer them. So just generally, in terms of the sort of the basics here, I think it might be a good time to summarize. The first message I think that I've kind of heard loud and clear is, if you haven't already, for any business, whether you're doing well or you've obviously suffered a big dip in revenue over the kind of COVID period, now is a good time to kind of look at your cost base. I think that's a clear message that I think, Stuart, you've kind of set out there. The second is, for any business, there is opportunity in the current environment, and it doesn't matter really what business you're in. Everywhere there is opportunity, and it's a matter of kind of working out, okay, well, how do we take advantage of that? And then thirdly, I think from what you've said is, if you're thinking about starting a new business or indeed kind of pivoting your business, it's looking at the macro trends that are really kind of part of have I'd say generally the economy's been moving in a certain way, and the whole COVID-19 thing has probably really just pushed us forward kind of 5 years. I think that's really the kind of message. The macro trends are super important, and making sure that what you're doing with your business aligns with one of those trends as opposed to going against them. I think that may be the three kind of points. Is there anything else that I've missed there, Stuart, that you'd like to kind of share with the listeners?
I just think that the only other one is that there is capital out there. I think getting capital at the moment from banks is incredibly challenging, but when the cash rate is as low as it is, investors are looking to make investments in different areas. And so if you've got good ideas to go out and raise capital, or if you've got a good fundamental business that's growing well and got opportunities to grow through acquisition, there is funds out there that's looking to be deployed. So that's probably the only thing.
This is a good kind of topic to kind of discuss a bit more. Like, obviously, you with your advisory business, you advise a whole bunch of different types of companies when raising capital. What are you kind of seeing? Are you seeing, is it angel investors? Is it VC funds? What are you seeing out there, and what are the kind of deals that they're doing?
Yeah, so I think that the deal space is alive more than ever. There's a lot of companies, even at the big end, who are having to recapitalize because they're hit by COVID in a big way. Our firm focuses on more like $1 to $5 million raises, so all that's seed stage or small evaluation businesses. But there's lots of those deals getting done. There's there's a lot of impact investing getting done. That's sort of another big trend, is making sure that there's opportunities out there for companies that actually give a shit about the world and are caring about the environment and making a positive impact. And the people we speak to there's actually more money than deals available in the impact investing space. So all different types with lots of good opportunities out there.
And are you sort of saying, are you more kind of equity rounds or convertible note rounds or safe notes, or what are the kind of structures that you're seeing that people are wanting to invest in at the moment?
I think a bit it is deal dependent. So convertible notes have been a really good way for people to get money in without the especially as bridge financing, or they're preparing for a bigger round and they haven't got time. I think that there is a number of that bridge financing coming up for companies who may not even need the capital because they're not sure what next year holds. As much as I'm saying that there's lots of amazing opportunity, I think 2021 is going to be a tough year. And depending on what happens with the economy post, ATO being incredibly forgiving and pushing off, they're almost lending the most amount of money probably right now by letting everyone pay their tax late. And then you've got the JobKeeper as well. So I do know of some business owners who are actually slightly more profitable now with JobKeeper than they were before. So that's going to be a big impact. So still not over yet, and be prepared for come March, a challenging time. And so some people are as building up their cash where possible so that they can take advantage of those good opportunities next March and April.
Or just deal with, I guess, if it's a really bad economic environment, if you've built up a cash balance over the kind of JobKeeper period, if you've been accessing JobKeeper, then you put yourself in a good position to ride out a year or so of negative, maybe, well, potentially not negative growth, but I guess we'll see. I mean, I think it's fair to say, so at LegalVision we have thousands and thousands of small, medium business clients and startup clients. And, to an extent, we are a bit of a bellwether for economic activity because we do a whole lot of business setups, we do a whole lot of capital raises, leases, all different types of corporate, commercial, legal work. And we saw definitely, obviously, a slowdown in that kind of March, April period where the pandemic hit. And everyone just went, I'm not spending money on anything, including legal work. But post that period, we've seen steady and continuing growth in top line revenue, and therefore in the number of new clients that we're servicing and existing clients that we're servicing, and so on and so forth. So, my sense of where we are economically is, yes, certain sectors, particularly in Melbourne, have been hit, really significantly, but others are doing, much better than they were. And so the net is actually, from my perspective, the economically in the small, medium business space, things are kind of going pretty well. And I think that's not the message that you get from, the kind of news and frankly, the various governments with their, with their kind of updates every day and so on and so forth. There's a lot of focus on, there've been 2 cases today and so on and so forth. And I think that's kind of making people think that potentially economically we're not doing as well as we maybe are. So it's an interesting time. It feels like a lot of businesses should be doing worse than they are. But I guess we'll see if a lot of this kind of is down to JobKeeper and I guess the artificiality of all these businesses getting JobKeeper, and when that comes off in March at the latest next year, will we see a whole bunch of businesses kind of folding because of that? My sense of it is we won't, because I think if you're again, if I look at our business and the volume of work and so on and so forth, if you're the type of business that's really suffering right now and doesn't think they'll be in business when JobKeeper stops, I'm not sure you'd be spending a whole bunch of money on getting legal work done, because you'd probably be kind of saving it for other things. So I'm quite optimistic.
It's going to be the companies that, let's say 10%, I'm just making up an arbitrary number, but let's say 10% of companies were close to failing pre-COVID anyway because they didn't have good business models or everything like that. It's just going to speed up the process. And I think that JobKeeper's probably extended them, and they would have almost shut come August if they, when winter was coming and they weren't doing a great job anyway, but then suddenly COVID happened and then they actually are more profitable because of it and sort of got to save. Yeah. So I think there's a fair chunk of that. And so that's why there will be a spike, but it's because not really any businesses have been shutting down during COVID. So
agreed, 100%. So we've only got less than a minute. Before we go, I just want to mention, so LegalVision, obviously we assist a huge number of small, medium businesses and startups. Our kind of core flagship product is called LV Connect, which is a membership product. It's $199 a month, and it gives you unlimited access to lawyers, so you can book in as many calls as you want about as many issues as you want. We also have really discounted fixed fees if you're a member. So what we're doing for Spark Festival listeners is we've got a special deal. If you call up or get in touch online, one of the team will obviously have a chat to you about LV Connect membership and the deal that we're doing for Spark Festival. Stuart, do you want to quickly, a minute, just give us a quick rundown? If you want to raise money, you're looking to raise money, you want to raise capital, how can you help?
Yeah, sure. So we've got 3 different revenue streams for TWIYO Capital. We're an external CFO company as well. We also do a little bit of corporate advisory and work with your accountants and your lawyers. With a number of our clients work with LegalVision, so can definitely give them a good recommendation there. And then we're also prepping companies for raise or exit. So building out the financial models, the pitch decks, the data room, so that you could get the best value for your company, whether or not you're going into a raise, and then introducing you to all the people who might be able to help you raise capital or raise capital through us, and then also help you sell the business for as much as possible. So That's the
Great.
goal.
Well, look, thanks for taking the time, Stuart. It's been a great chat. If anyone's got questions post this, either of us would be happy to take them. Just probably get in touch at legalvision.com.au. But apart from that, look, have a great day and thanks again.
Thanks, guys.